Well, the NUS projects climate-related losses to vary widely across banks and insurers due to differences in portfolios and limitations with climate risk assessment tools. It also said that while digital assets are explored for their merits, vulnerabilities in the crypto ecosystem pose risks to financial stability, and these need to be continually assessed. Professor Sumit Agarwal joins us now for more analysis. He is Professor of Finance, Real Estate and Economics at the NUS Business School and Managing Director of the NUS Sustainable and Green Finance Institute. Well, thanks for joining us, Prof. With climate-related risks, how would this impact banks and insurers?
Thank you. Let me just put the background. So NUS did a very thorough study where they actually did many stress scenarios using various transitions, orderly, non-orderly, and actually with no changes. And they looked what would happen to the shadow carbon pricing and what sectors may be impacted, especially like fossil fuel sector, utilities, sectors that have intensive in manufacturing and using engineering techniques, building and construction, and so on and so forth. And then they started looking at what would happen if there's a flood risk versus no flood risk. And bottom line is that what they find is effectively the bank's capital requirements would have to go up if there is either an orderly or even a non-orderly transition. In both scenarios, the capital ratios will go up. And the reason the capital ratios will go up is because corporate sector will have many stranded assets. And because of these stranded assets and rise in cost of capital for these corporations, and because of the losses they may be taking, they will end up defaulting on the projects they are undertaking. And as a result, the banks will have to raise pricing on this. Similarly, for insurance companies, the insurance companies who are insuring a lot of these projects and corporations will end up taking losses because of the expected and unexpected losses in this sector. Now, on the corporate side, it's kind of mixed because, go ahead.
No, sorry, you go ahead.
Okay, on the corporate side, I think it's also more complicated because a lot of companies that are in the fossil fuel or utilities or even actually coal, they have actually invested for the long term, 40, 50 years, and they have assets which they have paid for. And those assets now will actually have no value or no return on them. And so they will be taking bigger losses. And this obviously will have impact on SMEs that are relying on actually GDP growth or actually sustainability of the banking sector. And if banks are charging higher prices, that will trickle down to SMEs. And actually it will also trickle down to consumers who will end up paying higher pricing on mortgages or credit cards or even actually SME lending.
Well, Prof, also worthy of our attention today is crypto. So how do vulnerabilities in a crypto system stack up against a traditional finance system in Singapore?
Oh, yes. I mean, look, crypto is another very crazy place. The MAS did a good job trying to understand which part of crypto. Now, crypto is a myriad of things. They have the stable coin, which is kind of a pegged currency against the dollar. You can think about the Hong Kong dollar odd one that is pegged against the dollar. Crypto, a stable coin is something like that. Then obviously there are crypto assets, which we have seen what has happened to them in the last just 10 days or so. And then there's this DeFi or decentralized finance. Now, all of those are very dicey when we think about what the implications will be. There could be lots of scenarios under which, I mean, we could see problems. I envision issues of credit risk or currency risk or market risk. And all of these are very likely scenarios if we think of crypto assets. But even if I think of stable coins, stable coins are really not stable. I mean, their volatility is very high, even in these markets. So, I mean, I think we are much better thinking about what will happen in terms of climate risk. And we are on much shakier ground when we think about what will happen in the cryptocurrency world.
Well, many thanks
and its impact on the financial sector.
Yeah, well, many thanks for speaking with us, Professor Sumit Agarwal from NUS.